Welcome back to Alpha Recap. I'm so glad you could join us. Today, we're walking through a post-close market wrap, what moved, why it mattered, and what to watch next. As always, if you have questions, you can reach us at stockalpha.ai and ask away. We'll get to them. So let's dive in.
Thanks for having me. Excited to break this one down. There was a lot of nuance in the tape today.
Okay, start with the headline numbers. What did the indexes do today?
The big picture was a mild pullback for the large cap growth names, while small caps actually rallied. The S&P finished the day down about 0.33%. The Nasdaq 100 was down about 0.33% as well, and the Russell 2000, the small cap benchmark, finished up just under 1%. So, what really stands out here is that split.
Right, a two-speed market. I mean, when you step back and look at this, what was driving that split?
Two main themes: rotation into cyclicals and headline-driven, idiosyncratic moves. Money flowed into energy, certain industrials, materials, and small caps, places tied to real economic activity. Meanwhile, large-cap tech names felt some pressure as investors digested upcoming earnings calendars and the PCE inflation focus.
So explain rotation in plain English. What does it look like on the ground?
Rotation means managers are trimming exposure to the biggest growth names and redeploying that cash into stocks that tend to do better when the economy is more active. Think energy, industrials, materials, and domestically focused companies. Instead of piling into a handful of mega-cap names, traders were buying companies tied to construction, manufacturing, energy infrastructure, and so on. Right. And the other thing is, rotation can be gradual or it can happen quickly if a few headlines push flows that way.
Give me specifics. What sectors actually outperformed today?
Energy had momentum, thanks to deal and project news, including a high-profile energy-to-cloud linkage. Utilities showed unusual strength tied to grid-scale storage and battery projects. Industrials and materials got a lift from defense spending and AI-related manufacturing demand, and real estate pockets were active where leasing and deals were happening. Meanwhile, tech and communications were mixed and leaned a touch softer overall.
Hold on. Energy to cloud linkage? That sounds like a neat bridge between old and new economies.
Exactly. Chevron announced a supply tie-up to power a major cloud provider's data center in Texas. That was viewed as an example of long-term, contracted demand for energy services tied to hyperscale tech infrastructure. Analysts flagged it as a structural, cash flow supportive development for some energy names.
That's interesting. So utilities were strong for storage projects?
Yes, investors are repricing parts of utilities that are getting durable demand from battery storage and transmission upgrades. It's a way that defensive sectors are showing growth characteristics, which made them attractive today. Industrials also got a boost when machinery and construction names saw attention after a milestone from a large equipment maker, which reinforced the CapEx and infrastructure narrative. Materials and miners had wins thanks to financing and permitting headlines that suggest an acceleration in resource investment.
You mentioned company-specific moves earlier. Who stood out?
Caterpillar hit a milestone that put a spotlight on machinery demand. ASML and other semiconductor capital equipment names got positive chatter ahead of second quarter commentaries. Memory and supplier names tied to pricing dynamics like Micron remained watch points ahead of earnings and guidance. There were also mid and small cap names that saw analyst write-ups, companies like BWX Technologies and JFrog, which is a good example of the market picking idiosyncratic winners amid broader index churn. Right.
How about Fed and inflation? This was a big part of the tape too, right?
Yeah, that tracks. Inflation and PCE readings are still the central macro story. Traders are watching personal consumption expenditures numbers and any Fed commentary because those signals shape expectations about the timing of rate cuts. The market action today, small cap strength with slight weakness in large caps, suggested participants are pricing a scenario where inflation eases slowly, allowing real activity to remain resilient and favor cyclicals rather than a quick pivot to easier policy.
So analysts see this as positioning for steady rates for longer?
Exactly. Analysts note that the minor downside in cap-weighted indexes, alongside small-cap outperformance, is consistent with a market that expects steady policy rates for longer, rather than an imminent easing cycle. Morgan Stanley's caution about a possible major test for markets reminded folks that elevated valuations in some pockets make the tape sensitive to macro surprises.
Got it. From a technical standpoint, any signals traders were watching?
Technically, the divergence itself was the signal. Breadth improved beneath the surface because small and mid-cap participation was stronger even as headline averages retrenched a bit. For technical traders, that pattern can precede a broader re-rating if earnings and macro data back the cyclical story. But follow-through buying is necessary to confirm a durable shift away from mega-cap dominance.
Wow, not what anyone expected.
Honestly, I was a bit surprised by how clear the small cap bid was. And to add to that, crypto-related equities saw upside bias on renewed institutional interest. That narrative was supporting names that service or custody digital assets.
So crypto flows were back in play too. That can be a volatility amplifier, right?
Yes, institutional interest can push flows into crypto-linked equities, which adds another layer of sensitivity. Any regulatory or custody updates could move those names meaningfully in either direction.
Quick checklist. What should listeners watch in the next session?
Monitor PCE and any Fed speakers for policy clues. Follow earnings and analyst notes from capital equipment and semiconductor suppliers, logistics names ahead of their reports, and memory-related companies for cycle read-throughs. Keep an eye on retail signals around Amazon's Prime Day timing for consumer demand clues. Also watch for more energy and utility project announcements. Those could extend sector momentum. And stay alert on geopolitical chatter that could impact energy markets.
Right. And the other thing is, how should listeners think about risk right now?
The market posture is cautious rotation. Analysts note that selective, active management is favored in this environment because leadership is fragmenting. Small caps and cyclicals are getting rewarded for clearer ties to domestic activity, while some stretched growth names are being trimmed. That means opportunities may be sector and stock specific rather than broad-based. But remember, an inflation surprise or renewed concerns about mega-cap valuations could quickly flip sentiment. To be clear, this is analysis for informational purposes only. It's not a recommendation to buy, sell, or hold any security, and it's not personalized investment advice.
Awesome. Give us 3 quick takeaways to end with.
1. The market closed in a 2-speed mode, slight weakness in cap-weighted indices, and clear strength in small caps and cyclicals. 2. Sector-specific headlines, energy deals, storage projects, defense and AI tailwinds were driving relative winners today. 3. Keep watching PCE and earnings for confirmation. Incoming data will determine whether this rotation broadens or reverses.
Perfect. Thanks, Drew. This was super helpful and clear.
My pleasure. Yeah, that tracks.
All right, everyone. Quick reminder, this episode is a market recap for informational purposes only, not personalized advice. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. See you next session.
Thanks. Talk soon.